Hey, what's going on, everybody? I am here with my good friend and colleague Dave, and what we're going to go over today is basically a cheat sheet for equipment financing. All right, super important. And if you do this the right way, it will allow you to grow and build your business much, much faster. Problem is, most people don't do this the right way. All right. So, what we're going to get into, step one is the first thing you need to do is actually know where you stand. And what do I mean by that? You need to know where your credit is, both your business and your personal credit. Okay? Because this is some of the things that underwriters are going to be looking for. Next, you want to understand like how time in business impacts your application. And what I mean by that is if you're a startup, you really need 700 credit and home ownership. If you're not a startup and you've been in business a year, you can qualify for some programs. Once you've been in business 2 years, that's when you should be able to qualify for most. And the longer you've been in business, past 2 years, the more stable you're gonna look, and the higher you're gonna score when you apply to get equipment financing. So that's a big reason why. One, I tell people not to change their legal structure or corpse, and if they do, make sure you keep those old records so you can prove you've owned and operated the business the length of time you have. Next, what's your cash flow look like? Certain things like if you're getting a piece of equipment that's under 50,000 or under 100,000, you could do it with just an application sometimes if your credit's strong enough. But most times they're going to want to look at bank statements. So you want to make sure you have strong average daily balances and really no negative days or no cash flow issues. All right. And obviously, the more revenue you do and the more you keep in the bank, the more you'll get approved for because it shows that you can handle a higher payment. Right. And last but not least is, profitability. Certain times if you're getting a large piece of equipment, they want to see how profitable you are. Like a large piece of equipment, anything over 200,000. They want to see how profitable you are to make sure that you can afford the payments. All right. So what we offer here, and anyone that clicks on this or wants to work with us, we'll do a review for you for free before you even go shopping and give you an idea of what you can get. All right. Next, understand equipment is usually going to be equipment financing will be a 3 to 6 year loan with monthly payments. All right. And now here's the next step in this process. Super important. I see so many people that want to get a piece of equipment. They go to a dealership and they say, hey, this is the one I want. And they come back to us and say, all right, let's get pre-approved. Well, we need the actual invoice, number one. So when you are shopping for equipment and you find a piece you like, the first thing you need to do is get an invoice. That invoice is all it's going to be on that invoice is make, model, serial number, all the information and the price. You need that so our underwriters can look at it, match everything up, and work on an approval. The next part of this, all right, is when you're there, make sure you leave a deposit. The reason I'm saying this is there's some equipment that is so backed up, supply and demand, that if you don't leave a deposit, it could take a very long time to come in. So make sure you're leaving a deposit and you're securing that equipment. All right. One of the things they also look at is comparable debt. And this is a big, big, big tip. The reason why I tell everyone that if the equipment is over $10,000, you need to, absolutely need to use equipment finance. Because once you make 12 payments on that piece of equipment, whether that's on your business credit or personal credit, usually it's not on your personal credit unless it's a vehicle, okay? It counts as comparable debt. And the minimum you'll get approved for is 2x or twice what your comparable debt is. So let's say you have $50,000 of comparable debt, you should at least be able to get approved for $100,000, $100,000 piece of equipment. All right. Those are all very, very important things. So when you're shopping, make sure you get the invoice, you leave a deposit. All right. And then next, a lot of people want to know, what do you need to apply? Well, you need an application, 6 months bank, a tax return, and the invoice. That's a bare minimum that'll make it, that'll expedite it. Okay. With that, we could usually get you approved in a couple hours and get everything wrapped up a day or two after that. So super simple, Super easy. The better your credit, the better chance you're going to get approved. Okay. And the reason why you want equipment financing over, let's say, buying it in cash, okay, is you want to conserve your cash. Okay. The reason why you want equipment financing as opposed to using a line of credit is equipment financing is going to go out longer. It makes sense to pay for it over, the 5 or 6 years you're going to be using it, or 3 to 6 years that you're going to be using it, as opposed to a line of credit that may only go out to 2 or 3 years. Okay. So very important to use the right program to get the right, for the intended use. So always use equipment financing when you're trying to buy equipment. Last but not least, okay, couple things with when you're doing it. If you're doing a private party sale, meaning you're buying from somebody that isn't a dealership or isn't a vendor, okay, nothing really changes. You just need to get a purchase and sale agreement, and in that purchase and sale agreement, you want all the relevant information. What's the make? What's the model? What's the year? What's the mileage or hours? Okay, all the entire description and the purchase price, and that works just as good as an invoice. All right, and those are really like the keys behind equipment finance. Now let's go over the options. Okay, you have a straight finance option. All a straight finance option is kind of like a car payment, right? You're buying it, you're paying, X amount of interest over, let's say, 5 years, and it's a monthly payment. Nothing's different on a finance. Then you have a lease with a dollar buyout. A lease with a dollar buyout, all that means is it's structured as a lease, and at the end you pay $1 and then you own it. Okay. Now let's talk about that. It's the exact same payment. A purchase versus a lease with a dollar buyout. Same payment, same everything. It's just how you write it off on taxes. Okay? That's all it is. So if your accountant says, oh, do a lease with a dollar buyout, that's what you do. If it says do a purchase, do that. Because even on a purchase, you're still writing off the interest. Plus, if that equipment is over a certain weight, I believe that you can write off most of it. Again, check with your accountant. The last but not least is a lease, okay? Which is just you lease it, and at the end, that is either going to auto renew or you can purchase it. We recommend against not leasing it because a lot of times you're going to pay way more than it's worth, and 2, there could be things in the agreement that turn on an auto renewal. And now you're releasing the same old piece of equipment as opposed to getting into a new equipment, and you don't own anything at the end of it, right? So there's no resale value. You're not adding that to your balance sheet. All right. Now that we went over everything, all right, Dave, what questions do you have on this stuff?
You answered 3 I was going to ask.
Sorry.
Why was do you want equipment finance when you have the cash? Why is it better? You answered that one. The other one was taxes. Is you get a tax help you with your taxes by financing, and then the third was with the 3 different options. Another question I had was when you get pre-approved, are you allowed to pick your own vendor of where you get the equipment from?
Yeah, absolutely.
You're not to like a source, like say if you want a tractor, you're not only allowed to, or lenders only let you get it from certain vendors, or you could go shopping wherever you want.
So 99% of the time, you already picked out the vendor, because you're getting an invoice from that place.
Okay.
Now, at the end of it, you could always switch out that invoice for a different vendor if you're getting a better deal elsewhere.
Okay.
I always tell people on that invoice, go higher, okay? Because if we can get it for no money down at the higher price point, switching out that invoice shouldn't be an issue. The only time it's an issue, and this happened once to me in 14 years, is if that vendor is blackballed, okay? Or they're on a list. The only reason that happens is because that vendor was probably involved in a transaction. Sorry, 1 second. That's the hurricane warning.
Yep.
All right. So that vendor was probably involved in a transaction, and that transaction didn't go through smoothly, meaning they didn't get the equipment, or the equipment wasn't what they were supposed to get. And if that's the case and our underwriting team comes back with that, you shouldn't be working with that vendor anyway.
Yeah, there's some shady ones. You don't want to be working with them. You get screwed in the end.
Yeah, it literally happened one time.
Oh, okay. So when you get equipment financing, it's a simple interest, right?
It's
kind of.
That's a really good question. Equipment financing is typical. It either has an APR or simple interest. You can calculate it both ways. Okay. What I've seen that is very deceptive is some of the competition has actually floated one rate, and when you actually add the rate up, it's not that rate, meaning it's much more expensive. Okay. So you want those. That's a great question to ask when you're doing the process. Typically the best rates I've seen are single digits, but as of August, I have seen we have gotten repeated emails from banks saying, "Hey, our rates are raising," and we're seeing that across the board with all types of financing. And the reason for that is the money is getting more expensive to borrow from the banks, and it's going to be a way of life in in the next, let's say, 6 to 24 months.
Yeah. Another question is, are there any upfront fees or charges that I know some people charge them?
So, sorry.
No,
there's no upfront fees, right? The only fees, every lender has like a doc fee, and if it's a titled piece of equipment, there will be a titling fee if the lender is titling. Sometimes, if we're working with a dealership, the dealership will take care of the title work. Okay, but that dealership would still charge a title fee.
Okay. Cool. And then another one would be, say, if you're getting an equipment like a CNC machine, can you also include tooling with that as well?
Yeah. So a lot of times, what I tell our clients is anything that you need for the piece of equipment, put into that invoice. It could be installation work, and we get that financed.
Okay, so and shipping and all that freight and all that kind of stuff.
Correct.
All right.
That can all get financed into the transaction.
Okay.
Same thing with sales tax. Like if it qualifies or it has sales tax, we can roll the sales tax into the financing as well.
Okay.
Or if somebody doesn't want to pay the sales tax through the note, they can go and when they pick up their equipment, just drop a check and pay the sales tax themselves in cash.
All right, awesome. So, say if you're a sole proprietor, are you able to qualify for equipment financing?
Yep.
Okay. And would the same qualifications meet, or?
Yeah, basically. No,
So
there's
as long as you have
no
the credit.
difference.
Okay. And you also said for new starters, if you're not a homeowner, can you still qualify? Is there other ways to?
Not really.
Not really.
If you don't own a home and it's a startup, my suggestion would be do a term loan, not equipment financing.
Okay. And say if you have been in business for a couple of years but still don't own a home, would you be able to qualify or no?
That's not a problem.
Okay.
You don't have to be a homeowner for equipment financing unless it's a startup.
Yeah.
It just shows more stability.
Stability and a little bit of collateral.
Correct. Although, regardless, like the equipment's going to be the collateral.
Yeah.
One way or the other.
Okay. Awesome. Is there any kind of industries that are kind of hard to get equipment financing, or is it a little bit tougher? Like, say, if you're in trucking, or
no,
are the qualifications a little bit more stricter, or?
Not really. When you're in trucking or logistics, it's easier to get financing if you have 2 or 3 trucks or more, right? Why? Because it shows stability. The guy that has 1 truck or trying to get his first truck, if something happens to that truck and it goes down, well, guess what? How's he going to make the payment? He's got to get that fixed first.
Yeah.
That's why anyone that has, let's say, 2 trucks or less, it's a little bit harder to get financing. But we've done it.
Okay, awesome. But yeah, that's pretty much all the questions I have since you got the first 3 right off the gate. So
solid. Those are great questions.
Cool.
Thank you, bud. Hey guys, I hope this helped. All right, tune in for these. These are super important to help you guys grow your business. If you guys need equipment financing, reach out to us. We're here to help. We do a lot of this stuff, from this SBAs, lines of credit. So we're here to help. you guys grow your business. Thanks for tuning in. We'll catch you on the next one.
Thank you. Bye.